we have with us Mr. David Morrison, who's a senior market analyst, talk to us about everything that's happening in the global context and give us perspective on how should one look at India. Great having you, David. Good afternoon. In fact, good morning. But tell us, give us some perspective on what you make of everything that's happening with regard to global tariffs and how you're looking at the Chinese macro as well as commentary which has come out today. Just the global situation. How do you view it?
We are a bit on a knife edge at the moment. We've only got to look at yesterday's reaction in global stock markets, but those led by the US in particular, to the fact that the tariff, 25% tariffs went through on Canada and Mexico. They weren't watered down. They weren't postponed again. They're now in place. There's now a 20% tariff on Chinese exports to the US. And of course, we've also had retaliation from China. And we are also expecting, we're getting some pushback as well from Canada, and we are expecting retaliation from Mexico as well. Now, we heard Howard Lutnick, the Commerce Secretary from the US, say that he expects some kind of rapprochement possibly today from Canada and Mexico. And I think that's why we're seeing a bit of a steadying in US markets. Certainly, if we look at the US stock index futures trading this morning and overnight, they have bounced off their lows and they are steadier. But if we don't get any kind of watering down of the tariffs that came in yesterday, then I think that markets are quite likely to sell off again. And of course, the situation you asked about China, it's a very interesting one because it's quite evident from a lot of economic measures, and it's no use sort of just thinking about Chinese GDP coming out at 5% month after month on an annualized basis every single month. There are other measures which mean we should be concerned about the state of the Chinese economy. And one of those, of course, is the demand for energy products, which is down. So there are concerns there. There are long-term concerns on demographics. There are immediate concerns on the effect of the property meltdown that is still overhanging the whole Chinese economy and has really dampened confidence. And these are things that are sort of ongoing now. So that's what I think that's where we sit this morning, going into the main trading session and looking forward to the US Open.
And David, want your perspective. A lot of analysts are talking about how President Trump is largely using tariffs as a tool to get heads of states to the negotiating table and thereafter put across his views and points and negotiate. Is your view also the same? And at the end of all of this, let's say we zoom out a couple of years from now, do you believe largely we'll be at status quo? It'll just be a couple of geographies impacted, but outside of that?
That's a very difficult one to answer. I personally find it very difficult to think in sort of the long-term view over this, and not just President Trump's motivations necessarily, but how he intends to get to where he wants to go. I mean, I think, yes, I totally agree that tariffs are a negotiating tool. President Trump is using them not just a threat, but the follow-through to try and negotiate to get the specific things that he wants from his partners in the North and the South, but also, possibly Europe as well. I mean, there's without doubt, he has mentioned 25% tariffs on the European Union. So this is all ongoing. We'll see how it does play out. President Trump will certainly want something concrete that he can show and say, look, this is what I've done, this is what I've achieved through these tariffs, threats or otherwise. But it is, I think we are very much in a time of flux. His first few days or his first month or so of a presidency has really blown things apart to a surprising extent. I think most of us have been caught on the hop by a lot of this. And I guess we are hoping that through this as a negotiating tactic, we may all be in a better place in a year or two's time. And just bear in mind that just yesterday when President Trump spoke to Congress, He said that he expects some disruption from tariffs, some minor disruptions as far as the US is concerned. He's prepared for that, and he's quite and expecting it, and so he's not particularly worried about it either.
David, the other question is, if indeed this is business being done at a geopolitical level, wherein you do announce tariffs and then say, okay, we can compromise a bit as well, be that as it may that it's happening only because of some FTAs between the Northern American region. But if that is the template that gets set, would risk assets be happy? Because then the worst dream is not coming true. I mean, the word compromise, literally the word compromise, got the US futures excited after a very bad day at the Dow. So is that actually a good outcome, if you will?
Well, no, I think the longer that this drags on for, the longer that the uncertainty surrounds tariffs, how much are they going to be on what? I mean, the whole mechanism of imposing tariffs on your neighbors, and especially when you consider sort of the auto industry in the States and sort of the parts that go backwards and forwards between the US, Canada, Mexico, implementing these tariffs is going to be very difficult. There is no doubt that the market is very concerned about possible inflationary effects of tariffs, and we are seeing bond markets react accordingly. We've seen a big drop off in bond yields. The US Treasury has, the 10-year has fallen quite dramatically over the past week or so. Now, that seems to be pricing in concerns about a slowdown in US growth going forward. And in fact, the Atlanta Fed has got a GDP now tracker, which is suggesting that growth could be falling very, very sharply. So that's going to weigh on the market. And I think for as long as the tariff threats continue, that will be it'll be very difficult for US equities to regain that rally. Now, they could snap back very, very quickly. We are at oversold levels currently. And there is a real hope that there'll be some kind of breakthrough on tariffs as soon as today. But if the market doesn't get that, then I do think that there's a danger that we get further weakness over the weeks and months.
Okay, David, we'll leave it at that. Thanks much for taking the time out, and have a good day ahead.
Thank you. You too.
Thank you.